In this video, I'll be giving a quick update on the S&P 500, NVIDIA, Apple, and oil. This is the S&P 500 E-mini futures daily chart, and what we are looking at are time cycles. I've discussed these in a number of prior videos. The important time cycles for this video will be the time cycle here in pink, which is going to be the longest one we're going to discuss today, the 2.5-month cycle in blue, and the 2-week cycles here in orange. And so I did not make a video last weekend. I was very sick last weekend. I'm actually still a bit sick. But had I made a video last weekend, it would have been a good one because, as I discussed 2 weeks ago, we're looking for a market top because of the bottom in the US dollar. And NVIDIA, as we'll see when we get to that chart, had a very clear resistance level, which we gapped up to and sold off from very hard. I'll show you exactly how I knew NVIDIA was going to be topping once it reached this level. But first, as I mentioned 2 weeks ago, we're actually a little uncertain with the time cycles here, and there's a lot of evidence that while I originally thought this pink cycle was troughing early, there's a lot of evidence that suggests it may actually be coming late. NVIDIA is actually giving us another indication that that is going to be the case. So I just wanted to touch on this really quickly to say, while I'm expecting some type of top to be forming, and while I am short in a non-aggressive way, you cannot go short in an aggressive way until you break a 2-week cycle trough. And in this case, the last 2-week cycle trough came in on June 11th. The next expected 2-week cycle trough should come in early this week. And so once we have that trough and we get a bounce from it, should we break below that trough, then we can start looking at more aggressive shorts. This is the SPX daily chart, and as I mentioned in the prior video, the way that I would have been looking to go short in a non-aggressive manner would be to sell calls using the upper warning line of this longer-term median line set, which gives us this upper warning line, this median line, and this lower warning line. And so a couple of weeks ago, when we reached this upper warning line, I sold short-term calls about a week out, which I closed the very next day for about 25%. And then I sold some longer-term calls way out here in July. And then again, this past week when we achieved this sliding parallel here in orange, which is just a parallel line of the upper warning line placed along this point where we reached when we exceeded this upper warning line before coming back in and showing respect to it. So again, this week I did the same exact thing. I did that on Tuesday. I sold calls about a week out, which I actually still have open. I plan on closing those on Monday or Tuesday based on the 2-week cycle trough that we're expecting. And then I also went about a month and a half out and sold calls up here as well. And those I'll hold on to and manage those based on price action and how the cycles play out. So despite the bullishness I mentioned a moment ago and how the 2-week cycle troughs are continuing to show upward momentum and there's no reason to go aggressively short, that does not mean you can put on conservative shorts. In my opinion, that's how I like to use these upper and lower warning lines once we achieve them. You certainly can achieve them, and that gives you a very clear stop loss to use should price continue in whatever direction, in this case to the upside, beyond this, in this case now this sliding parallel that I have here in orange. I've zoomed out a bit, and again, while the time cycles are a bit unclear, what is becoming a little more clear is these zones are shifting because, again, these are correction zones that I was expecting price to potentially go to during the next 2-month cycle corrective period. And as I discussed, the further price moves up, well, the further we just move this final pivot up as price moves up. And what that does is that shifts what is this zone. This zone was placed down here because during the last video, price was somewhere around here, and so I had a roughly 40% chance we would achieve that median line. As price moves up, we also move up that third pivot. And now what's happened is this is basically joined in with this other zone that I had here. And so whenever we do get this top, should it be in this area, this will essentially become one zone. And then these two 40% are going to become 80%. And so just to kind of show that, I'm going to go ahead and I'm just going to take this off right now. I'm going to expand this zone down. And so I'll change this later, but this will essentially be 80%. This 10% zone is also going to be affected. I'm going to go back to the E-mini futures daily chart for just a moment to show why. So that 80% zone is based on all of this being one blue cycle right here, from this trough to wherever this next trough would come in. However, now that it does appear as if it may be two blue cycles, one with an early trough, we have to give consideration to the possibility that we'll only be correcting this portion right here, in which case we'll have a median line set like this. It's going to look different on the SPX, but we'll go ahead. We're going to place this on here right now. So it would be from the high on May 23rd to the low on May 31st to wherever this particular high comes in. And you can see now we have this median line here. So we're going to shift this up. And I'll probably play with this zone a little bit, but this I'll give a 10% chance of holding. Because even if this does turn out to be the correct median line set, there is still a chance you come to the lower warning line, which happens to coincide with all of these other median lines here. And when you have a bunch of median lines and or upper or lower warning lines which intersect with each other, oftentimes price kind of gets sucked into that zone. And so even though all it might need, if we are just correcting this, is to achieve this median line, there's definitely a chance we can be coming down to this area. As discussed a moment ago, further evidence for a bit of a larger pullback not only comes from the dollar, but it comes from NVIDIA. And we'll take a look at that chart now. If you like the video so far, be sure to hit the like button and subscribe for more content. This is the daily chart for NVIDIA, and I was quite confident we were going to $140, and from there we would find resistance. Now, I did not necessarily think it was going to drop in such a rapid manner, but I did expect it at the very least to slow down. And the reason why, we'll take a look at the log chart here. It's just this little L button here. I don't like to use the log chart for stocks. I like to use it for Bitcoin and Bitcoin associated stocks. However, NVIDIA is a bit of an exception as it has moved exponentially over the last few years. So if we zoom out, I'm just going to change this to the monthly chart because that is where I am using this median line set from. This is from a low back in December of 2018 to the high in November of 2021 to the low in October of 2022. And so as you can see, we'll go back to the weekly chart for a moment. This median line set is very relevant because not only did we go straight to the median line set, we zoomed through it, and on the daily chart you can see we actually gapped over it, which is a good indication that it's a valid median line set. When you either find resistance at the median line or you gap over it or you zoom through it and then back test it. And so we did ultimately do that. Let's go down to the daily chart for a moment. And so we can see we gapped over it. Then we came back. We almost retested it. Here we did retest it. Pretty much spot on. And then we came back through it, back tested it, back up through it again, back tested it once and twice before we took off. And I've discussed this in a number of videos. When you make it through the median line and back test it and then come off with strength like we did right here, there is a good chance you're going to the upper warning line. Now, it might take time to get there like it did here, but there's a very good chance you're going to the upper warning line. And I'll go ahead, I'm going to take these off for right now. But as you can see, where did we go? We went exactly to the upper warning line at 140. And then we found very good resistance from it. Now, you don't necessarily need to sell off like that. You could grind sideways. But again, I was very confident we would at least slow down and we would grind along this upper warning line, if not start to sell off from it. So while I did nail this top, I did not actually go short NVIDIA. I actually didn't even sell calls on NVIDIA because when something is moving as strong as NVIDIA, you don't want to fight that type of trend. And so what I did was I used the thesis or the idea that we would at least be slowing down here as extra support for a reason to sell calls on the SPX. Another reason why I was expecting to find the top at least very soon is because if we look at the prior blue cycle here, it was extended. But let's go from trough to peak, 65 days, followed by a 42-day correction. Now that is long for these blue cycles that I have on here, but let's take a look at this cycle. This was also a long cycle from trough to peak, 62 days. Now, that doesn't mean we're necessarily going to have a 40-day correction, but if it can be something close to that and follow in at least a loose manner to the prior cycle, this is at 39 days. That puts us at the end of July. And then if we go back to the E-mini futures chart, I'm expecting a blue cycle trough somewhere in early August. And so if NVIDIA even just goes sideways, the rest of the market right now has been pretty bearish. Breadth is bad. And so if NVIDIA is not going to be holding up the market, that bearish pressure is very likely to show itself. And so if NVIDIA does do that pretty much through the end of July into early August, that would make sense that we should see some type of correction here. And in fact, the last time NVIDIA had that correction, let's go pull up NVIDIA. We'll put it in a new pane at the bottom. This is that corrective period in NVIDIA. What happened in the rest of the market? It sold off about 6.76%, which if you watched my video 2 weeks ago, that is roughly the sell-off that we're looking for here. This measures out to about 5.25%, and that was also about the size of the sell-off we would expect at a minimum, pretty much, if there's going to be a sell-off based on the bottom in the dollar as well. Now, of course, there is the chance we do go sideways. That's why this is up here. However, most of the evidence would suggest this is likely the area that we would sell off to based on a percentage standpoint from the bottom in the dollar, as well as now the correction that we're expecting in NVIDIA. So what could save the market? What could give it what I would expect to be the minimum type of pullback here? And again, this actually can continue to move higher for a little while. Let's take it off the log chart here. This can continue to grind up a little bit, and this can continue to move higher. But ultimately, what would save it to keep the market up at wherever this median line comes in, around the 10% area? Well, that's actually the rest of tech. Let's take a look at Apple right now. This is the Apple daily chart. And as you can see, I have this median line set on here, and we are expecting a 2-week cycle trough coming up in the beginning of the week here. There is more room to the upside. We have zoomed through the median line, so it is possible that we ultimately retest the median line. And that doesn't have to happen immediately. That can happen further out over here. But it is possible this turns back around and moves up towards the median line. And so if Apple starts to move up again in a strong way, even though NVIDIA may be selling off, this could help hold up the market and reduce the expected correction. If we quickly run through some other tech stocks, Microsoft is moving towards an upper warning line, but it is within a larger median line set from which it does appear there is some strength. We could break through that, but I would definitely expect at least a slowdown at this upper warning line. If we look at Meta, it's actually kind of coming into a support area based on a long-term trend line as well as a median line set, which we have previously found support at. So this could continue to move higher. So again, this is just another reason why even if NVIDIA is slowing down, there are other tech stocks out there, big tech stocks, which could help to hold up the market. This is the Google daily chart. This one is moving into resistance, but Amazon is showing some bullishness. And if it breaks out here, yeah, there is some limited upside based on this median line set, but we've already exceeded that, and it would appear as if we are going to move towards the longer term upper warning line here. So there's upside here. So some of these other tech stocks are still displaying some pretty good upside, which could be why even if the S&P does sell off a bit, this might still be a pretty valid pullback area. Looking at these charts right now, I'm almost talking myself into putting this as a 20%, and then maybe this will be 70%, and then 10% down here. This 10% coming from the possibility that the pink cycle here is going to be coming in late. Finally, I just want to take a quick look at oil. I discussed this probably about a month ago where I was expecting potential resistance up at this upper warning line and a move down to this median line. I did think perhaps that would come in over here, which would be more towards the end of the expected length for this pink cycle, which I forget how long it is in oil. I don't actually trade oil. Sometimes I trade some of the oil stocks, but this is about 216 days here. But this has definitely come in early because we achieved this modified shift median line set. I know there are a lot of median lines on here. I'm going to go ahead and take off this standard median line set, which I had discussed in that video. I said I did not believe this to be a valid median line set, but what often happens is the upper warning line, even though this is too steep a median line, the upper warning line often acts as resistance during the move down to the median line of the modified shift. And that's pretty much what happened. We didn't actually tag it, but now we did tag it and we have broken through. So I'm going to take that off. Here is the modified shift, pivot 1, pivot 2, pivot 3, upper warning line in blue, median line in red, which we tagged perfectly and bounced from. And this is the type of move you want to see right here to confirm a bottom before you have true confirmation. And so what I mean is, to get true confirmation that this bottom is in, you would have to see it take out the prior cycle high, which in this case is way up here. But I'm very confident this is the bottom of the pink cycle, even though it's a bit early. And that's because we sold off hard to the median line and then bounced strong from the median line. This is a type of move that gives you a high level of confidence that the expected trough is in. Now, I'm going to leave that on here for now. And we do have this other median line set, which is even longer term, which we already bounced from, and now we're currently finding resistance at. However, this actually gives a good trade opportunity. In the video where I discussed oil, I mentioned how the shorter time cycles are pretty inconsistent, but there is a time cycle. It's usually between 21 and 28 days, and so I don't have it marked on here because, like I said, it's pretty inconsistent. But considering we are at a long-term cycle trough, I would definitely look for an entry during that cycle. And so if we measure this, we're currently at 17 days. 21 days would be Tuesday, and then 28 days would be the following Tuesday. And so somewhere in there, I'm expecting this to trough, and I would guess there's going to be a pretty strong bounce. Now, we're not far away from the two-month cycle trough, so I would play it pretty short term, but there's probably a pretty good trade in there. And then if we look at the last two pink cycles, and we look at the second 2-month cycle within each of those, look at the move that we get out of this cycle here. So this pink cycle, and then it's 1, 2, the second blue cycle. Look at that move. And then the same thing in this prior pink cycle, the first blue cycle, the second blue cycle. And look, this is not as strong as the first one, but it did continue on pretty well, giving you a great trade opportunity. So while I might look for a short-term long in the very near future, perhaps this next week, I will be looking out more towards the end of July, which interestingly enough also kind of coincides with the potential correction in the broader market as a whole. I'll be looking there for a good entry to where we can perhaps, I'm going to take this median line set off. I don't think we need that anymore, but perhaps we get some kind of pullback. I don't know necessarily where that will come to, but I think at that point we'll definitely achieve this median line set, and this is where you can put on a new median line, something like this. Whoops, I missed the exact top there. If you put this on, I can't get this on there. There we go. I would expect after this first pullback, we might break out, and perhaps this is where we're going to, and it's going to get a late peak followed by a late trough. That is definitely possible, but I would be looking for this median line here. And then whenever we get this other trough, we'll just do the same thing, except it will be from here. It might need to be a modified shift depending on how steep this is, but you'll go to wherever this peak comes in and wherever this trough comes in, and that's going to give you another moving target to the upside where we can look for a trade in oil. And again, as I mentioned a moment ago, I don't actually trade oil futures, so I would look at something like USO or perhaps Oxy or MRO, something like that, where I can trade some options on that. And actually, considering the long-term bottom expected in oil that it appears we already have, this might actually just be a good time to buy the stocks if you're also interested in investing in stocks. Of course, this is not financial advice. You do that at your own risk, and you should do that based on your own analysis. But that is something I will be considering. As always, thank you for watching this video, and be sure to subscribe for more.